Hey, good morning, guys. It's September 16th, 2025. Welcome to your TA Tuesday. And Charlie, we miss you, bud. We'll just leave it at that. And we're going to dig right in. So this isn't tax, legal, financial, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. But first, before we jump in, super big thanks to Barney Pilkington, 2190, Michael Stewart, 993, Mr. 2J, Darwin is Meta, and Scooter Niner. I like the name, Scooter Niner. Just thank you guys so much for your comments that you're dropping in the comment section on the different videos that I'm making. Sounds like people are getting a lot of value out of the TA courses, also the breakdowns on options, and I like what Scooter Niner said at the end there. Definitely recommend Gary's course. I appreciate that, bud. The people that are taking the courses, they're really learning technical analysis and TradingView inside and out, as well as learning how to trade options. It can be very overwhelming and very daunting, but I really appreciate y'all's feedback. And with no further ado, let's jump right into the charts. All right, guys, as always, we're going to start with the Bitcoin TABI model. Here on the TABI model, you can see we are still light orange. If I zoom in on it, you can see the true market mean has moved up to 78,366. 78,366. Many think that that would be around where the floor is moving forward, right? Can we dip below it in a bear market? Yes. But that's typically where the bear finds the bottom whenever we go into a bear market, if we were to. In the short term, when we're in a bull market like we are right now, the short-term holder cost basis typically acts as support. That's moved all the way up to 110,783. We can almost call that $111,000, so very strong support there. With your 50-day and your 100-day moving averages not too far apart, at around 114 and 113 respectively, 112.5. You'll note that the Meyer multiple has been going down. Your MVRVZ score has been going down. And the historical volatility is in the pooper, as we've talked about. For Bitcoin's historical volatility to be below 25, it's extremely unusual. It's rare that it gets down there and stays down there. So it's almost like a calm before the storm right now. So keep an eye on these things. Keep an eye on some potential big moves with Bitcoin. We'll talk about that as we dig into the daily chart. But for right now, the TABI model is still light orange. We have dark orange, light red, dark red still to go. So just slightly overheated. If we go into the daily, the Bitcoin daily, what we'll see is we've been in an uptrend essentially since April 7th. We've had a couple pullbacks along the way after making a new all-time high back here on August 14th. And now a local bottom down here right at the bottom of this support zone, which is around 107, 108, right? So that's the immediate support is around 107, 108. We do have some resistance to the upside right around $118,000. On the daily, we're pretty much at the mean. We're at a neutral level with RSI and MACD. You'll also note that the liquidity has broken out into a new all-time high. Not a shocker. Guys, look at this liquidity chart. This is global M2 money over the years, and it's just been up and to the right, consolidation, up, consolidation, up, and now consolidating and getting ready to break out again to a new, or has broken out again to a new all-time high. Again, that's global liquidity. Typically, your risk-on assets, things like stocks and Bitcoin, follow global liquidity. As more money supply comes into the world, that money finds its way into hard assets like Bitcoin, and we like those things. It makes our assets go up. Next up is the Bitcoin 4-hour chart. On the 4-hour chart, you can see these periods of consolidation. Let me zoom out. It's going to look really busy. But what I want to show you is we were consolidating down here around the previous all-time high between $60,000 and $70,000. You can see that long consolidation last year. Then we spiked coming out of the election. with another long consolidation, even making our way back down and retesting the previous cycle's all-time high, then a spike up and a consolidation, then a spike up. And you can see these, a spike up, consolidation, spike up, consolidation. It's only fitting that the next thing should be a spike up. But what do we have to get through first? Again, look at this big block of volume right here at around $118,000. That will act as immediate resistance. Support starts at around 111 and goes down all the way down here to excuse me, to 103, 104. The 200-day moving average, I think, would act as a last resort right now, and that's down at around 103. Do I believe we're going to go down that far? Potentially. You never know what they could do to the markets, especially to wick out any leverage before this next big move up that I anticipate is going to happen. We do have an immediate sell signal, though, here on the 4-hour chart. So if you're trading Bitcoin, keep an eye on that. It's a 4-hour sell signal. We do have the red mean reversion dots that are close to 2 standard deviations above the norm. However, we've almost reset back down to the mean, with RSI almost reset at 50 as well. So looks like a lot of consolidation right here at this area. The trend never really flipped orange and stayed orange. We are supporting on this 50-day moving average. Like I said, that's around 114. Below that is the 100-day moving average at about 112.5, 113. So support to the downside immediately there. Upside, again, we've got to get up through $118,000. If we go over to the Solana Bitcoin pair chart, combo chart, I was going to call it, pair chart, definitely overheated to the upside on the daily. We are over 1 standard deviation to the upside. We have broken the 70 on RSI for the second time in the last few months. And that was on a powerful Solana move, with Bitcoin staying relatively steady. Bitcoin ground up a couple $1,000s, but Solana shot up, and we'll see that on the Solana only charts. We did put in a local high. This high, first time we've gotten up to 0.00215 since all the way back here in February. So March, April, May, June, July, August, September, 7-month high on this Solana Bitcoin pair. I anticipate that will continue going north, meaning Solana will continue to outperform Bitcoin. Along the way on these immediate spikes, you could be taking some Solana profits and rolling them into Bitcoin if this is a pair that you pair trade. For me, Bitcoin kind of acts as a savings account, right? I know IA talks about Tesla being his savings account. For me, it's Bitcoin. I know that over time, when I'm talking time, I'm talking 3 years, 5 years, 10 years, Bitcoin is going to outperform the dollar. There's no question in my mind that it will. So why would I hold that dollar in a fiat denominated savings account when I could put it in a Bitcoin denominated savings account? And we'll talk about that later when I talk about the MicroStrategy preferreds as well. But this is one area that I'm doing that. I roll profits from other cryptocurrencies into Bitcoin whenever those said cryptocurrencies outperform Bitcoin. How often and how long can you do this? Guys, you could do it indefinitely. If we even make our way back up to 0.0031, there should be some zones along the way, like this resistance you see here at 0.0025, where you can roll some more Solana into Bitcoin. And then if we get up to 0.003, roll some more Solana into Bitcoin. It's just locking in your profits this cycle, because if there were to be a bear market, I believe that Solana will drop faster than Bitcoin will. So it'll go up faster than Bitcoin will, but it would also pull back faster, in which case I can pull from my Bitcoin savings and go back into Solana as need be. Here's Solana by itself on the daily chart. Great march upwards since April the 7th. If you can believe it, on April 7th, Solana was $95. We've hit a local high recently of $250. So from $95 to $250 in just the last few months, right? In the last 5 months or so. So Looking great there. We are overheated. We just printed a red mean reversion dot for the first time in a while here on Solana. We broke 70 on the RSI. It will likely take a breather here because we finally broke through this resistance zone that you see here that extends all the way up to about 220. So I wouldn't be surprised to see it come back down and retest that zone before marching back upwards, maybe even retesting the middle of this linear regression channel again. It tends to make its way to that quite frequently as you look back over the last several months. So don't be alarmed if you see this pull back to either here or down to here before taking off again and starting its next leg up, as we would say, with Solana. And I do anticipate that's going to happen very, very soon. Here it is on the 4 hour. You can see it a lot more clearly on the 4 hour. We were well north of 2 standard deviations on the mean reversion tool. RSI, let's put a number on that. RSI was 83.22 on RSI right here. So huge, huge move to the upside. You notice it crossed over down through the moving average. MACD also had a crossover right here. We had a couple of sell signals on the confluence. It's right around this area of resistance, this red box that you see here. What do I anticipate going back down and retesting the top of this support zone? Assets like to move from areas of support to the next area of resistance, come back down and retest support, break through the resistance, hit a new area of resistance, come down and turn that previous area of resistance into support. So support to resistance, break through resistance, come back down and retest resistance, turn it into support, and go up to the next level. And you see that very, very frequently, especially with something like Solana. So right now, resistance is right here at 250 to the upside. Support is down at around 215, anywhere from 210 to 220, let's call it. Somewhere around 215 would be the immediate support. Ethereum on the 4 hour chart, ETH on the 4 hour chart, throwing another sell signal after a massive, massive move to the upside. Giant red mean reversion dot here, greater than 70 on the RSI, MACD crossover right here on Sunday, sell signal up here on the confluence after going out the top of the confluence cloud and breaking back down in. Where do I anticipate the support? Super strong right here at about 4,300, 4,350. So super strong support there to the downside. You almost have the 50-day moving average there also. Where's resistance? $5,000. It's the same as it's been. Breaking through that psychological level of $5,000 with Ethereum right now. I can only just laugh when I say MicroStrategy. Guys, I was wrong on this one. I think it takes a certain type of individual to admit that they're wrong. And this is one where I fully anticipated that strategy would be off to the races by now. Even if it didn't get added to the S&P 500, I thought the accumulation would be underway in a huge, huge, huge sort of way. Well, Michael Saylor had different plans. He has smashed the MNAV of this thing. If you look at it, the MNAV is at the lowest level it's been at. Guys, I don't even know how far you have to go back. If we look at the undiluted, you got to come all the way back here to February. If you look at the diluted, you got to come all the way back here to February. So it doesn't matter if you're looking at the diluted or undiluted. We are at an insanely low MNAV right now. There's virtually no premium being placed on the stock on top of what Bitcoin they're holding. That's what that means in plain English. We are a long way away from the all-time high. The all-time high is around 550 with MicroStrategy. We're sitting down here at 330, just going sideways. I'd say the only good news out of everything is we're starting to print green mean reversion dots. We look like we're starting to level out. I mean, the price action really has been flat for the last week. You could say, oh, it's gone down. Maybe it's gone down a couple dollars. Maybe it's gone up a couple dollars. But for a high flyer like MicroStrategy to literally be coiling up and going flat like this for a week, 2 weeks straight, very unusual. Does look like we are finding a bottom though here. Call it 325, 330. And MNAV, it could go lower, I guess. They keep adding more and more Bitcoin to their balance sheet, and they're adding the Bitcoin faster than they're diluting the stock. but they're still diluting the stock at a fast enough rate that it's not allowing the asset to really breathe right now. If we go into the 4-hour chart, I believe we've been in a downtrend since July 18th because we've been making lower highs and lower lows. Again, you can see though where we seem to have found the bottom. This section right here, that's like virtually no volatility. That's just straight sideways movement, plus or minus $5 or $10 either way. So for right now, it looks like we're finding the bottom right here. We've been getting buy signals all along the way. We've been getting green mean reversion dots all along the way. We've had RSI below 30 multiple times. We've had crossovers on MACD. We've been out the bottom and in the lower 1/3 of the confluence cloud. All the different things that I typically look for when I'm looking for buying signals have happened over and over again. We just haven't found the bottom yet. People are really taking it out, I'd say, on Michael Saylor. Michael Saylor's taking it out on the stock. So I know he doesn't listen to my channel. He doesn't listen to retail investors. He's got a very long-range plan, but gosh, I just hope that he lays off the ATM here for a little bit because it will allow this thing to explode, especially when Bitcoin explodes. I anticipate that if Bitcoin explodes up to 140, we're going to see MicroStrategy right back up over 400 again. Again, provided he lets the stock breathe a little bit. On the other hand, this guy has been an incredible high flyer. What was not on my bingo cards was Elon buying 2.67, I think it was, 2.67 million shares of Tesla on the open market, over $1 billion worth of Tesla purchases on Thursday and Friday last week. That was massive, guys. So when you ask, why did this thing gap up 3 times in a row? Well, the last 2 times it was because of Elon purchasing Tesla shares. We saw it take the stock from essentially 350 straight to 430 with very, very little stops along the way. It was just a straight up march. You'll notice here there are 2 gap ups, 3 gap ups. A gap up occurs when we close one day, so here on a Thursday, and open the next day at a higher price. Let me zoom in on these. So let me zoom in so you can really see what I'm talking about. There you go. This is a gap up. We closed here, 338.53. We opened the next day at 348. So that's from 338, let's call it, to 348, a $10 gap up. Here, we closed at 369. We opened at 371, a $2 gap up. And here we closed at 396 and opened at 423. You can't even see the open. It's way up here. We filled in a lot of that gap over the day yesterday, but you're going to hear me talk about potentially filling it in the rest of the way, I believe, over the next couple of days. We are on the one day, we're not that mean reverted to the upside. We're at a level that we were at basically back in June, right? But when we were that upside, that mean reverted to the upside back in June, we did sell off and we did go back down in, fill some of these gaps in that where we gapped up along the way. In fact, we went down and filled every single one of these gap ups that we saw back here. Gap up here from Wednesday to Friday, Friday to Monday, and from Tuesday up here to Wednesday. So there were gap ups along the way. There's another one right here from Friday to Monday, a gap up. So there were plenty of them. They went back in and filled right here with this big red, nasty red candle. Watch out for something like that over here. For many of you, this may be on a profit-taking level. Others, you're just going to hold Tesla for life and you're never going to trade it. That's fine. There's nothing wrong with that. Just realize it's extremely overheated. And when we move over here onto the 4-hour chart, even more overheated. You can really see it on the 4-hour chart. That mean reversion, if we look at just the mean reversion and I go back, and let's let this populate in. We go back as far as we can go back. We haven't seen a mean reversion over 3. I don't know how far we're going to have to go back. Keep going. Keep going. There's one. The last time we mean reverted over 3 standard deviations on a 4-hour extended trading hour chart was on June 14th, 2018. 2018. 7 years ago was the last time this thing mean reverted that hard to the upside, meaning greater than 3 standard deviations. All right, let me show you what that looks like again as we zoom back out. Greater than 3 standard deviations. We went straight out the top of the linear regression channel. Guys, the cloud for the bullish cloud is for Confluence is way down here. We were out of it by 30 to 40 points. That's insanely unusual. Don't be surprised to see this mean revert back down to zero. Zero, not the share price, the mean reversion. Go back down here to zero, which would imply that we come back and fill in this gap, maybe even filling in this gap and coming back and retesting this previous area of support, turning it into resistance. Similar to what you heard me talking about with, I think it was Solana or the Solana Bitcoin pair, right? Not saying that will definitely happen, but you need to be on the lookout. If you miss this move, if you were sitting on the sidelines and you didn't have the amount of Tesla that you wanted, you're looking for something like this as another entry point. If you took and sold some covered calls up here or sold some shares up here, you are looking to buy back those covered calls and re-enter down here. I made a whole video about that yesterday. I'll link to it right here. I won't spend much more time on that gap up, but I wanted to make sure it was in this video for those of you that didn't see the one that I made yesterday. All right, so that's where I see things going with Tesla. Right now to the upside, we are at resistance. It was at 420, was the next area of resistance, 420, 430. It's always a zone. I believe we go back in and we play in this zone between 380 and 400 for sure, maybe even retesting this 360 and turning it from resistance into support. NVIDIA's been flat. It made a recovery over the last week or so and then has just flattened back out. Seems to like this 175 area plus or minus a few dollars. On NVIDIA, on the daily chart, we're flat on mean reversion. We're relatively flat on RSI. We're flat on MACD. On the 4-hour chart, similar. We're slightly mean reverted to the upside. You can see that down here on the mean reversion chart. We're pretty much slightly above, slightly overbought here. Slightly overbought here on RSI. You can see we're above 50, where the 50 level is. Same thing, we've got a crossover right here that happened on MACD. So could we see this pull back a little bit and stay in this zone? Yes. So what do I need to do? I need to extend that zone a little bit to the right. Notice I don't change the parameters as far as the price, but I will move these bars out to the right because we never know how long they're going to stay in this support zone. Same thing up here. I can change this one and I can say we may spend a little bit longer below this resistance zone. So resistance to the upside, 180 to 185. Support to the downside extends all the way down to 170. We're basically playing in a zone right now with NVIDIA between 170 and 180. I look at it as a gift. Anything around 170 or lower, for me, I'm adding to my position right now. You'll see that when we get over to the rotation model. And anything up at 185, 180, 185, that's where my covered calls are. They're really tight to the money, doing them weekly or monthly at a time so that they're not too far out in the future. This guy, this is the other area where I said, guys, I was wrong. I thought for sure this was going to turn around in here and that MicroStrategy would start to outperform Tesla. Well, that didn't happen. We broke down further, and Tesla still has been kicking the teeth in on MicroStrategy. This ratio is at the lowest level it's been at. Let's see, guys. Let's back out. The lowest level it's been at since January of this year. So, since the very, very beginning of the year, we have not been at this low of a ratio, which it's around right now 0.79. Call that 0.8. So it would cost you 0.8 of a Tesla share to get one MicroStrategy share right now. Again, if you believe that this pair is going to continue back and forth, just like here, people probably thought Tesla's never going to come back. And down here, people thought MicroStrategy's never going to come back. Up here, Tesla's never going to come back. Down here, MicroStrategy's never going to come back. Tesla's never going to come back. is MicroStrategy going to come back? Does it continue with this cyclical behavior? Again, think in terms of ratios, think in terms of growing your bags over the long run with this pair, especially in tax-free accounts. If anything, you're looking for it to put in a bottom down here, give you buying signals like a green triangle, a green dot on mean reversion, and then the trend starting to flip upwards or going from orange to blue. When that happens, that could be a great time to go from Tesla into MicroStrategy. Once MicroStrategy outperforms Tesla, you can go back down into Tesla again, right up here. So I'm hypothetically throwing those on there. You can tell I was way more excited about this when it was going back and forth a lot. Right now, it's been very one-sided since July. And I admit I was on the wrong side of that. I had pair traded some of my MicroStrategy into Tesla here, but I had started to move Tesla back into MicroStrategy. The good news, I'm still, of that pair, I'm still probably only 60-40 MicroStrategy to Tesla. I just wish that right now I was 60-40 Tesla to MicroStrategy and I could move some of that Tesla over and even those two out. But I do tend to keep them relatively even, somewhere around a 50-50 ratio, because I believe in both for the long run and both are my bet on the future right now. All right, two more, guys. Three more. This is the MicroStrategy IBIT. Same thing there. I thought for sure moving 100 IBIT into MicroStrategy was a good call right around this 551 level. Now we're down at 50. So it means I could have gotten slightly more MicroStrategy had I waited till down here. I would have gotten 20 shares of MicroStrategy instead of only 18. Again, we've just been below the cloud. That's it. The last time MicroStrategy was above the cloud was all the way back in July, like mid-July was the last time it was out the top of the ARB cloud over here on the right side. The last time it was in the top 1/3 of the Confluence cloud on this pair. We've been in the lower 1/3 of the Confluence cloud pretty much since the end of July. So August, September, almost 2 months now that we have not been able to get back up towards the top part of either the ARB cloud or the channel or cloud, the Confluence cloud over in the IADSS model. This is the rotation model. The rotation model had me last move into Nvidia. I did slide I'm going 100% on this now. I did make some changes to it. So you'll notice the model, I'm no longer, I'm retaining 10% here, 90% there. I'm not doing that anymore. I just set this up to swing 100%. It's just way easier that way, guys. So if you're going to set it up, I'd just suggest doing it that way. Set it up at 100%. Now, don't worry about the 0% retention or anything else. The only exception to that would be if you are only pair trading a couple of assets on here. You have to have a third asset. You would put down one share and 100% retention. That way, that one never gets traded, and it's only the other two that are trading back and forth. There are some people using it that way as a pair trading model, the same way that I have this set up, for instance, with IADSS. So right now, we're in Nvidia. That was the last signal. I did take that signal. You'll note that these two right here I did not take because I was already in MicroStrategy. We'll see where this takes us to next. And finally, the preferreds. They all just paid out a dividend, guys. So the quarterly dividend got paid on STRK, STRD, and STRF. The quarterly dividend on STRK was $2 a share, $3.56 a share on STRD, and $2.50 over here on STRF. And lastly, 83.3 cents over here on STRC, which is 10% divided by 12 based on a par value of 100. Holding up nicely, holding up around 96.5, 97. Looks to be like that's going to be the support level right there. So for those of you holding STRC, if you held it as of Friday of last week, look to see that dividend get dropped into your account by the 30th of this month, 30th or on the 1st of October. A lot of times is when it'll actually show up in your account. As always, guys, thanks for tuning in today. I hope you liked what you see. If you did, make sure you like this video. Comment below. What'd you like best? What'd you learn? What would you like to see more of? Make sure you're subscribed to this channel so you don't miss any videos like this. And finally, book a course with me. Book a TradingView and technical analysis course so you can learn these charts inside and out. So many people want to start trading. I'm getting people reaching out for one-on-ones that have zero charting experience. And they're like, teach me. Well, that's what the courses are for. Book that TradingView and technical analysis course, then come have a one-on-one with me. Because in the one-on-ones, what I'm noticing is people don't have a foundation of charting at all. Guys, that's where it starts. I'm a technical trader. It all starts around the technicals, which is TradingView, technical analysis, IADSS, the free indicators that are built into TradingView, right? Also, if you want to learn how to trade options, I have an understanding options course. There are people that are just booking the understanding options course, but they don't have a foundation of TradingView and technical analysis. That's where it all starts, because you have to know when to time your options. Timing is crucial when it comes to options because you're under the clock. You're on the clock, right? Options have an expiration, shares don't. And that's in the course, and we talk about that. So you can find all that and more over at gdinerocoaching.com. And finally, guys, I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Have a wonderful day, guys. Take care.